Welcome back, everyone. This is the London session on TopstepTV. I'm just going to see whether everything's going out as it should be. I can see the stream. Can everyone hear me? Can everybody see the screen and myself? And then if that's all fine, we can crack on. All right, so we have some products in rollover, okay? So that's never really my strong point because the moves tend to be a little bit lackluster. A prime example of that was crude oil yesterday. Now, before we get into that, if you're here for the first time, I am Deeyana Angelo. This is TopstepTV. This is the London session. We have various other broadcasts throughout the day, including the overnights. This is one of them. And then, of course, we have the main broadcast as well. I've been trading for about 17 years now. 12 years out of that, I've been trading futures. And my specialty is, well, it's alternative markets. I'm not that keen on trading equities because I feel that they're more one-sided products. So it's like, what do we do? On most days, we're going to be buying equities when you look at, larger sample sizes. And although now I am Series 3 licensed, that's my second qualification. I actually had something similar over in the UK. We still need to give you the disclaimer, right? Because we're not CTAs. So anything you see here is for educational purposes only. Okay, if your plan says something similar to mine, feel free to trade it, but please do not just blindly copy what you see anywhere on TopstepTV. Try to develop your own plan, to trust in that plan, and not rely on others. It's going to serve you much, much better. So having said that, I said that we are in rollover in some of the products. Now, obviously, crude oil started rolling last week, and then we had still moves that resemble rollover like yesterday. If you weren't in on the failed auction during NYMEX, which was, so let me just increase this, which was this thing, and if you tried to trade this, it was not a good experience, right? So I didn't have the best couple of days. Did manage to keep the drawdown yesterday to about a 500 bucks. I think it was like 550 in my live. However, until the rollover in presumably copper, that's been my favorite product for London. However, copper has been very, very quiet, and then it sort of went completely crazy after my 4 p.m., which was probably about 11 a.m. Central. And by the time that, I held that trade for like 4 hours, and I was like, okay, that's enough. So I closed it, and then it popped. So I made like 18 ticks out of the trade that really I was aiming like 90 ticks for, and it actually went to target. So just one of those days of, to use Ariana Grande's "thank you next" sort of a day. But because of that, I am going to stay on the combine at least for the first part of the day, just to maybe try and get this combine over the hump if I can see something interesting. And if I don't, then I'm not going to trade. Markets don't really care whether we're on air or not when some of these levels appear. But what we can do is to give you an overview of where we are in relation to some of the levels that I like to use and that are either part of order flow or options chains or auction theory. And that's something that I use quite heavily. It's worked pretty well for me for many, many years, like well over a decade now in intraday. So with that in mind, let's start with platinum, actually. I think platinum looks pretty decent. Platinum opened the London session about 90 minutes ago, slightly above London value from yesterday, and then promptly just fell inside it. I don't like trading anything until the initial balance is over, which is the reason why we start these sessions 90 minutes in, because by then I usually have a pretty decent idea where they want to take it, and that's that's happening right now. Actually, we do have London value low, but also an options related level. Now, if this fails the auction, there is a chance that we rotate all the way back to 975, which was also kind of a pivotal point all this week, and I expect that to remain. One thing about some of these options levels that are so close together, sometimes you can run into chop. So where the price just doesn't really go into any momentum trades. And if that's true, one of the hypos that I have for today is that we're going to end up in a neutral day in platinum, at least for the London session. Obviously, when COMEX starts, that's considered the main session for these products. But as we've seen, they actually tend to move pretty nicely for London too. So we'll see what happens here. There's a chance of, like I said, a failed auction long. So failing the auction to the downside. They tried to find business below here. For now, they're failing. I'm not too crazy about trading post-value acceptance around these areas unless I have a very good reason to. One caveat against the failed auction is that we have a nice decent move that happened throughout Asia, and now we have this little unclean arrival, if we're going to use the supply and demand idea, of the price not getting to a level very cleanly and then creating a resistance pretty close by. So I would like to see that resistance break down, but that would minimize my profit margin for this particular trade. So we'll see. If I see that this resistance here at 974 starts to break down, I might pop a long in, but until that happens, I'm just going to sit and wait. I do have some levels further down below, so that would be hypo 2, going into a breakout with this move that happened in Asia, maybe after a bit of a pullback. And then going down to the average daily range low, where we also have the average session range low for London, somewhere around 962 ballpark. Now, one really good setup here that would entice me would be a neutral day short from around overnight VWAP at 975.7. Where we also have that pivotal level where most of the calls are located at 975. Like I said, this has been the pivotal level all this week. We either kind of come up to it and then react from it, or we sort of go away from it, then retest it, and then go higher. So those levels are lines in the sand. They're not, definitely sell here, so you get to 975, definitely sell here. No, if we overshoot it, there is a chance that later on in the day that can get retested on a back test. You might run along. So it's an interesting thing, but I don't think that there's that much scope for a super momentum trade, which means we have to switch gears into range-bound trading. Reading the market state on the day is something that is a very important skill, considering that most markets, when taking a larger sample size into consideration, will be range-bound about 56% of the time. Now, you do have some products that have a slightly lower probability of that, but it's still like, 48 to 52%. So a lot of the days in the year, we're not going to have crazy momentum moves. So when you see somebody going for, massive trending moves, just know that those sorts of moves, like true trending days, they're rare. So if you catch one of those, don't think that now every day, you're the king, you're the wizard, and you're going to be catching those every single day. So, adjust your expectations. Before we continue, I have some announcements for you. So we're going to have 10 new Topstep VIP teams coming in January. Super exciting. And we're going to have a couple of chances this week to get yet another entry into Topstep VIP. And also, that check-in form is going to be happening during the main part of the show. So it's not going to be overnight, so not any of these sort of sessions like at the buzzer or slow markets or market kickoff. It's going to be during the main broadcast. Okay, that starts at 8 a.m. Central. So keep your eyes peeled. You are going to have to be a part of the show, be almost like a bell to beller to catch that form. And additionally, you guys know the Top Quiz is back. Well, now on Friday, this Friday, the top 25 winners of Top Quiz will also gain an entry into the VIP. So it's super, super exciting. What do you get as a Topstep VIP? You get 3 months in the Trading Combine for free, 2 free resets per month, access to an exclusive Discord channel with your coach, and obviously various events with the coach and your team. Also, you will get no activation fee. Topstep will absorb that cost for you. And finally, if you like what we're doing here, leave us a Trustpilot review, because obviously in this day and age, the opinions of others about companies that are operating online, they are very valuable, so that other people know how you've done with Topstep, right? So you can tell others what was your experience. Let's see who's in the chat. We have new news. Main source, hello, Matthew V. What is a crime? Anthony 14. Obviously, our lovely moderator Bruno is with us as well, taking care of all of us. Debbie C. Michelle. Sarah. Lazy Lion. So I see some regulars. Blue Boy says, I'm not liking trades tonight. Well, at the moment, I'm not either, which is why I'm sitting here with a combine open. Siwa says, which are the products that don't have the range-bound percentages? Just GC. Okay, so gold is one of the products that goes a little bit more on trends than some of the others. The rest of them, unfortunately, if you were hoping I was going to say NQ or ES, no. So those two typically have range-bound days of about 54% from what I remember from our research. X Viper TV says, Deeyana, question, what time does the London session official open EST time? EST 3 a.m. Eastern. Okay, so it's I start this 90 minutes into the London session, okay, because obviously I want to show you some trading, and I very, very rarely put in trades in the morning, and the reason why is because I just suck at them. I don't know whether it's because I'm not awake or I'm just like randomly clicking buttons, and yet my prefrontal cortex is still half asleep. So I'll show you my stats. Why I avoid certain times of the day. So let's go overall, because I don't want to like nitpick. So let's just go overall stats. So here we go. As you can see, anytime I try to trade market pre-market London, and then during the first sort of 90 minutes, I suck, right? So I can't you know, it's just not a thing. Partly is the reason why the London Open is not as crazy as you know, some of the other products. So some of the other sessions, in particular the New York session, is absolutely bonkers. Like when that starts, everything starts flying around. But London is not quite like that. So you might have a setup called the Frankie Fake Out every so often. So Frankfurt Exchange starts trading. It's a relatively small exchange, and it can bring a reversal. And sometimes I do a scalp if I see something really obvious. However, recently it's just not really bringing much moves. So I usually kind of kill it for a small amount, which is where you see these little losses. And then once that's over and done with, I obviously have my big move. However, this does, just full disclaimer, this does include DAX trading. So you can see that my DAX trading comprises the majority of my P&L. And it's been my breadwinner now for about 3 years. By far my best performing product. So I am quite, you know, sad that we still don't have it in Topstep. And you know, it is what it is. I do trade it on my main large account, which is it's not under my name, it's under my company's name because I trade through a limited company. So naturally, I'm not going to eat up like 40%, income fees, which is absolutely insane. Taxes in the UK are very high, and if you try and run your trading that way, you're going to give a lot of money to the taxman. So I basically run it all through a limited company. So just wanted to make that perfectly clear. And then you can see that also the reason why I avoid the first hour of trading, even though I did try, to trade it, because I'm like, oh, maybe I can figure something out. Well, no. This just tells you, right? Just bloody avoid the first hour of NYMEX. That is NYMEX, that is not NYSE. It is literally me trying to trade crude oil and RBOB during the open. So it just doesn't work. Once I avoid that, you can see that the rest of the times of day are pretty decent. I have done some equities trading around about this time, which is accounting for some of these losses. And you can see I'm not an equities trader. That is the reason why I'm not an equities trader, right? Because I usually look for shorts around about that time. I look for sells. And we know that the markets keep going up. I don't gel well with equities because of that one-sided movement, and you can see that in my stats here. So, if you're wondering where did I get this form from, it's Edgewonk. I know that we have the analytics in Topstep, but I prefer some more elaborate metrics like this, hour of day. I also like using, so some people use Sharpe ratio to figure out whether their approach is working or not, but I don't think that Sharpe ratio is that's suitable for intraday, because that's more for like long-term investments. There is a ratio called CalMAR. That's, to me, more suitable because it measures the drawdown, the amount of drawdown that you have versus the returns that you have. So it's not just like, oh, how long does it take you to recover from a drawdown? No, it measures how many times effectively you've hit your daily loss limit. How big is that compared to your average winning day or your biggest winning day? So effectively, it's a much better measure for intraday. So for those of you who are the part of, as Jack likes to call it, the DLL club, that ratio, CalMAR ratio, would be able to tell you how much you suck, and you would aim to have it over 3, right? So 3, anything over 3 is pretty good. So I would urge you to maybe look at that. I don't know whether TradeZella has that as well, because I know that's a very popular metric, sort of like the trader journaling platform, I suppose they're called. So maybe have a look at it in there as well. CalMAR is CalMAR. Okay, CalMAR. Okay. Yeah, talk about taxes in Sweden. Yeah, I mean, mostly Europe is pretty horrible when it comes to personal income tax. Let's see. DAX is a pain to try and trade today. Well, I don't trade it every day, It's not going to be like, oh, Dee wakes up and puts on a DAX trade. If it doesn't look right, it doesn't look right. I had an awesome trade yesterday. I made like 2.5K just on that down move. I did get hit trying to long it, but I exited that pretty quickly, and then it was just a small loss, and then I saw the news. And obviously that's a headline risk, which is DAX is very sensitive to that, especially anything to wars. And then I just ran it all the way down, which was great. I was done trading DAX, like pretty much before the first hour of trading was done. And I got in, I think, around 1 p.m. my time or something like that. Let's have a look. Have you ever used TradeZella? No, I use Edgewonk. So I've used Edgewonk for a number of years now, and there is no need for me to go and look for another thing. I like the fact that you have custom metrics in Edgewonk and a whole bunch of other things. So for me, that's a better option. But, it's a good platform. I've seen it. I've seen many people use it. I kind of sniffed around it, and it's very similar to Edgewonk. I just prefer the metrics. All right, the metrics that Edgewonk gives us. So this extension in platinum is still causing some sell-off. So why don't we do a little bit of trading here? Now this is just going to be a hypothesis, but because this is a combine, I am going to go with a slightly bigger size. I'm going to adjust my stop here to what I normally use and then see if we can get a flush down. Don't hold your breath though. And then I'm going to control some of this downside with a little order like this, just to get us out, so that the downside is a little bit more controlled. And let's see what happens here, whether they can push it. For that, I'm going to go down to 100 tick chart and make sure that we stay below this ribbon, or at least inside it. What do you think about copper short? I'm not thinking anything in copper, because let me show you what's going on with the rollover in copper. I'm really not happy trading that. Like I said, I tried trading it yesterday and the day before, and it was just not easy, man. It was just like range bound for the most part, and then it went on a run. So, you know, by the time that it went on a run, it hunted me down, like mentally, just totally exhausted me. So I was just like, you know what, I need a bit of a break. So here is what is happening in copper. If I go down to the quotes, this is the CME website. And if we look at the March volume, so we're looking at this volume, this column of volume, right? So we have December, which is the current front month, 11,000 contracts. But look at March, 5,000. So, you know, we're obviously still massively in December, but whenever this volume starts to split between, we're basically going to roll into March. That's what this is telling me. And if you don't know much about why these things roll into like future months without, you know, going to January, then February, it's to do with the requirement of deliveries for either the producers or the users of this product. So if you have, you know, a lot of demand, for example, you have, you know, people using copper for heating products and stuff, that's going to jump during the winter. And this is why December is one of the deliverable months. But then obviously we have some demand for copper in March. So therefore, it's not going to make too much sense for the users and producers to use January and February when all of their deliveries and, you know, cash forward contracts have been done for March. So this is why you will see some of these more alternative products jump ahead. Okay. So until this is over, and we are rolling now, I think we're probably going to roll sometime into next week. So Friday is when the official rollover happens. And even though December should last until December, a lot of the times, if December has been an active front month for a while, it's going to roll forward. And that's exactly what we have. So I'm not happy trading this and just getting really tired and mentally exhausted trying to find a good trade in copper. And for me, copper is something where I don't scalp it because it's you know, reasonably slow and smooth. So what I look for in copper is those more extended moves that I can stay in on for about 3-4 hours and then make a killing of about 120, 150 ticks, right? So I'm not going to be going, oh yeah, you know, we need to do this and that. And then there's something else that's happening in copper on the daily and weekly charts. So if we go get our heads out of the 5-minute 100 ticks and all of those intraday time frames, what do we have on the daily chart? Well, we have a reversal, right? And we've actually gone, if we had smacked back down yesterday from this high, I would have been more inclined to look for shorts today. But even if I do anything in in copper today, it will be a long because of the larger time frame outlook. Like, why would I want to be shorting here when we have a potential for further upside move? We are in a thin area on the volume profile with the volume POC all the way up at 436.20. So, there's nothing for me here. Like, this is not a short that I would take. I try to make my intraday trades make sense from a large time frame point of view, and they tend to be the ones with the most juice in them, right? So I wouldn't be shorting copper. Copper, like I said, is not something that you scalp on, because it's not going to give you that much juice. And if it does, it means you're in a trending move, and then you're using the wrong strategy. Instead of using a trending move strategy, you are using a range bound, scalpy type thing. So yeah, that's just my 2 cents. I mean, you do what you want. It's your money. It's your decisions, obviously. But for me, I'm not going to be shorting copper today. Like, the only time I would short copper is if we go higher, massively higher, hit one of my levels, and then I notice that it's losing steam. Then yes, but at the moment, no thanks. All right, so platinum showing signs of life here. That's pretty good. Let me get some more coffee. Rainmaker says, don't you all ever sleep? The markets don't sleep. Why should we? Just a joke, obviously. We need our sleep. What is the crime? Has a perfect answer. I will sleep when I'm dead. I used to say that all the time, actually. My mom was always like terribly worried that I don't sleep enough. And she's like, you should be sleeping. You should go to sleep early. And I'm like, I'll sleep when I'm dead. It's always my thing. Okay. So we have NVIDIA earnings today for those of you who do trade equities. We might have, it's going to be either or. So sometimes markets get completely bonkers ahead of it, just unwinding positions, getting ready for it, blah, or it's completely dead. So, yesterday we had a pretty decent day. So if we take the stats about what happens the day after the big days, I would say that we're probably looking at a bit of a range-bound day on equities today. Again, just a guess based on, it's an educated guess based on probabilities of what equities like to do post very, very big days. So yeah, a long-time listener, first-time caller, Rainmaker. What is being traded right now? Platinum short. I trade copper and I trade platinum quite a bit for these sessions. I would trade DAX, but we don't have it yet in Topstep, which brings me to my my daily plug to bring Eurex into Topstep. So please, guys, like we have quite a few people watching here. I've just posted Eurex on the direct post in feature base for SIM to funded. You only have to be logged in to Google or Facebook, so you don't even have to be in Topstep. Just please go and click that post because it will be very helpful, right? There's many of us in Europe who are dying to trade DAX, and I know that even Dakota has been trading DAX in his personal account, and it's a great product, right? We are all missing out so much not having DAX. So please, we have, like I said, quite a few people in here. Just go into there and click. It's like 1 second of your time, right? 1 second to go in there, click, upvote it, finish it up, right? Does copper and platinum have any correlation? No, I think platinum has more correlation with gold. I mean, all metals will have a certain degree of correlation, but honestly, I thought that copper and oil have more correlation because, there's that sort of a circumstantial correlation where you use a lot of copper in a lot of heating products, like heaters and stuff, they'll use copper. So there is that. And I don't think that copper particularly correlates very well. If we look at gold, do you know what? I'm going to do that on just my other platform because I don't want to mess this up. But if we take copper on like very large time frames, like there is a correlation, but it's not like by a factor of 1. So if we look how trends have been going, so I have gold on the left and I have copper on the right. So how similar is this to you? You know, if we scale out, well, we can't really scale out because this is a front month contract. But basically, you know, this one all-time highs. This one not at all-time highs, right? Now, there are times of the year when they will correlate. However, there's a lot of time where, for example, look at how long copper has been kind of going down. And this one has only been going down for like 3 weeks, and this one for many, many weeks. So that is not really a correlation of one, which means that there is a correlation, but you can't, like, especially not intraday, you can't really rely on it. I always have all of the metals, including silver, on the other screens that I have, right? Okay, we're getting that move down in platinum that I was looking for. Now the question is, how long is it going to take? Now, usually what platinum does is it kind of falls down to about 45, 50 ticks, and then it starts to reverse. So maybe this is a little bit too ambitious. So I'm going to aim for like 50 ticks here, ballpark, and then let's see if we can get that. But yeah, so with the intraday correlation, you will find that some days platinum and gold correlate really well, and then some days all of the metals are sort of completely disconnected to one another. One will be completely static, another one will be going on a run, and then the others are sort of doing partial things, and sometimes they even go the opposite way. So copper and platinum, I've seen them go completely the opposite way, where, you know, platinum is shooting up and copper is falling. Now, copper is connected to inflation, right? It is very sensitive to inflation. So when you have any kind of inflation news, like CPI, for example, copper moves really well, and it can give you a very nice trends post release, which is a stark difference to gold that just does this like mad whip thing at the release, and then pretty much after the first sort of 30 minutes it just dies a death. And that's, you know, very different from what copper does, which, you know, is pick a direction and then keep going for a couple of hours. And that's why I've much preferred copper. And, you know, Carl Hungus is the one who told me, well, maybe you should look at it for London, because I did trade it before, but I never really thought of trading it during London. And I did go back and look. It does move for London. Like, it's not like a new thing. It's always been pretty active. However, I think this year we've gone into a bit of a weird thing where London has been making most of the moves. Now, that's not been the case for most of the time. Usually, like, the way I've perceived crude oil, the way I've perceived copper and gold as well, is that gold will move sometimes for London. But it wasn't consistent enough for me to go, yeah, I'm definitely trading gold every day. So this is why I gravitated towards DAX, because London is its main session. So by the time the overlap comes, most of the moves are done, or they just kind of get extended, right? And then the volume sort of dies out. But generally for copper, it seems like right now, London is the bigger range, even though it's a shortened range. So we have 120 ticks trading for those few hours of London before the overlap. And then we have COMEX kicking in and running for technically longer than London. But obviously we have settlement pretty early in copper, and it's only 104 ticks. So right now I would say that the main session for copper is definitely London. Now for platinum, that's not quite the case. We still have COMEX that is 160, but London still moves at 132 ticks. So again, they're relatively even, right? When it comes to something like gold, similarly, we are in a very weird state now where, London and New York both move quite a lot, with New York being slightly bigger. So 263 ticks average versus 217 ticks average. So all very nice movement, and I am measuring these over 40 days. So, I'm not just taking like the last 3 days or 10 days. Is copper affected by home sales? Not really. That's not really something. In fact, I've sat through that release several times, and it just does nothing, So if you want to hold anything, copper is generally pretty safe to hold through some releases, and even some releases that are like super important for equities. copper just doesn't care, right? It's just chilling. Like PPI, I didn't really see much of a reaction from PPI, but CPI, on the other hand, consumer price inflation, that's very reactive. So do not hold trades into that. In fact, some of my, I think one of my best days last month in copper was due to the CPI. So I ran along and then closed it ahead of the CPI, then reopened it a few minutes after we managed to get the release out of the way, and then got yet another like 50 ticks. It was really quite beautiful and drama for free. So that's what we want. So copper moves way slower than gold. Yes, copper is smoother, right? It's not to say that it can't like jump, but it's not going to be as wicky. It's definitely not a wick fest, as I like to call it. Definitely not a wick fest like gold. In fact, I don't know how many of you know this, but I do have a chronic illness that kind of sometimes causes brain fog and a whole bunch of stuff like extreme tiredness and whatever. I find gold a little bit tricky to deal with. So I will trade gold towards the end of the day because I'm like sick and tired of the wicks that it does, and you have to like be really like fully on top of your game, and I don't think that I am at the moment, and I haven't been since I got sick, unfortunately. It's just one of those life things you have to deal with. But yeah, so for me, copper has been great because it allows me plenty of time to make a decision. And I can breathe through it, and you can easily, like I do like to look at a 100-tick chart, but I can easily make my decisions using a 15-minute chart, which means I don't have to rush. I can just wait for my reversals and my, extensions of the initial bounce for the breakouts. Just purely just, nice and calm. It will have a wick on the candle, but it's not going to happen in like 3.5 nanoseconds. It's going to be, nicely wicking around for about 5 minutes, 10 minutes, 15 minutes, then you have a new candle, right? So that's why I kind of gravitated towards it as well. And platinum is similar. Platinum is not going to go, you go into a trade and it's going whoop, 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 woof, smack, you're out. It doesn't do that, right? Especially not on stop losses that I use. I typically use a disaster stop of 35 ticks in both. No, actually in copper I use slightly smaller, 28 ticks versus 35 ticks in platinum. But I found on gold, for these kind of ranges, I really need like a 50-tick stop in order to not freak out. And that immediately on these sort of accounts puts you down into micros. Because it's a lot of, 500 is a lot of money to risk in any of these combines and XFAs. And, most of us want to get payments out of the XFAs and the lives. So not many of us will have that big of a balance in there because you want to pay yourself, right? So yeah, it's always a little bit tricky to trade with size if you haven't like padded the account, or you have a big risk appetite and you can just size up, be selective, size up. And I think I'm still somebody who trades quite a bit. Like I'm probably one of the people who trades less than some people. I've seen people do like 20, 40, 60 trades in a day. My idea of over trading is when I get to about 13. But I would still say that's a little bit too much trading for me to actually plow in some serious size here. DAX is a different thing for me because DAX is, 1 to 2 trades per day. I don't really do, I have another personal account where I sort of use it for more sort of YOLO trading, and that is under my name, but it's nowhere near as big as the one that I have. So yeah, that's it's like different accounts, different goals. So I have one account where I do put these sorts of trades. I will trade like 5-6 trades per day there on different products, not on one product. And then I have my main one. It's like, serious money, and you do strategies that I've agreed with the other partner, because it's not just me, it's it's a company account, so you can't just go YOLOing and clicking buttons. It's not how it works. And we've agreed 2 to 3 DAX trades, but actually on most days I will do 1 or 2, so that will be it. And then we run we have like a equity protector, kind of like this risk manager that you have here, but I have that on all of my platforms. So I have it in AMP Futures MetaTrader 5, I have it in Ninja, and obviously we have it partially in Topstep, and more good features are coming, so we're looking forward to that. It's the only prop firm that is allowing you to use a risk management system that will stop you from going on total crazy things, and actually gives you a lockout. Looking forward to the number of trades per day. But if any of the developers are listening, just make sure that we have the ATM strategies before then, because this whole risk per trade in dollars is not going to work. If you like, this is the problem that I see with it, just from a point of somebody who has worked in software development systems and, architecture and blah. So basically, if you're going to run the risk per trade in dollars, if you have somebody like me who wants not to dick around, excuse my French, with adjusting things depending on the amount of position that I plowed in here, because for example, if I plop in one lot in platinum, that's going to give me a 70 tick stop because my risk is 350 per trade. But you don't want that. So then what I do is to click once, twice, 3 times, or I click two position on platinum because it's $5. So I will go 2, and then I will add on to it if I want to be in with 3 or 4. But that's immediately like 1, 2, 3 trades, right? It's not one trade. So that causes a problem in the logic of number of trades per day. If you are managing your risk or doing the risk calculation in dollars versus ticks. So if we can correct that, that would be amazing. So it's just, just a suggestion, but I think everybody would welcome that. So basically you have number of ticks, and it should be probably somewhere down here like Quant Tower and NinjaTrader. There's a reason why those ATM strategies are right under the dome. And then we can control our risk by, selecting a position size, clicking, and knowing that it's going to put 35 ticks, not 70, not 3 if you're in with larger position. Whacking a 10 lot is going to give you, a 7 tick stop. So we need to sort that out, and make sure that everything is in ticks. Otherwise, the number of trades per day, I would have to set them to higher. There are ways around it, so we can set them to a higher number of trades per day, accounting for the fact that I will click 3 times before I, want my full position size to get the ticks, the correct tick size without dragging it around. But yeah, other than that, I think this is the only firm that is giving you risk management tools that you can control by yourself, for free. There's no extra cost to it. It's wow, mind-blowing to me. Akram says, hey, how did I get into a trade? Well, we broke through the initial balance, which was, without drawing more things here, I can show it to you here. This red box, this is a 30-minute chart. Red box indicates the initial balance. We exited the initial balance. We're trying to go lower. There's a danger that we go into a failed auction, but for now we have a drop formation, and for now it seems to be finding a little bit of sellers below it. How well is it doing? Let's have a look at the TPO profile. Well, it's slower. So this is a slower auction down. Currently we're trying to leave access to the upside, but we tried that in the previous 30 minutes as well. That failed, and then I have some levels down here which my algorithmic ranges at 962 roughly. So probably won't get there, so my actual take profit is somewhere in the middle. But yeah, it was just a breakout from the initial balance, post-value acceptance, and looking at the market structure that we created on the way down on a 30-minute chart. Now I'm tracking how the movement is doing through my ribbon on the 100-tick chart. For now, there's nothing to worry about. It's below the ribbon, so that indicates a decent move down. If that starts to turn around, or if I spend a long time looking for this move, I will close it early. And if not, if it just goes back up, I do have my protective stops here. One of them is there just to trim the position a little bit so that I don't get hit for the full, whatever it is, 525. So by trimming it at my maximum adverse excursion, that is my maximum MAE, maximum adverse excursion for this particular product, bar a few ticks. So obviously you don't want it exactly there because that's where it draws down to. Yeah, that controls the downside a little bit. But basically, what is MAE? Is basically how much your trade draws into before it turns around and turns into a winning trade. Okay, so that is the number that you can use, plus or minus a few ticks, obviously. I use usually like MAE plus about 4 ticks. And then, I put my protective intra stop at MAE plus 4 or minus 4 if we're long. So yeah. What is the red and blue volume indicator? That is the DMI indicator, so directional movement indicator. It has ADX inside it and DMI. I think it's actually called directional indicator, DI. DI. So I think it's is this one. Is it that one? DMI, directional movement indicator. Yeah. So it's basically just to track how the movement is doing. Right now, we are definitely short. Now, these are the colors that I put down because I prefer those colors to the red and green. That's a bit screamy and aggressive. We don't want it aggressive. So yeah, for now, we are, in a decent movement. It's not crazy. But it's still, it's still kind of chunking down. So it's not, again, London is not going to be as crazy as some of the others. But it is slow. Like, I wouldn't say that this is the best movement lower. So I always ask myself, how is this auction doing? And right now we're building structure, right? So that's not the best for a complete directional move. But sometimes you can have these limited auctions where they kind of trickle down and then they build structure on the way. And you have to be very patient and not get annoyed with the market that it's not doing what you want it to do. You just have to go, okay, do something else, maybe do some cooking or, play with a dog or something, learn to paint or sculpt. Anything to pass the time. There's a lot of waiting around, especially during the London market. All right, morning, Dee. Do you have a login on the CME website or not needed? Not needed, Paul. Great to see you here. I know you're a permanent fixture here, and we should get you in over again at some point. But yeah, no login needed. I literally just Google CME and then the symbol that I want, or HG, and you go into quotes. So let me show you that. So you just go Google CME GC, and then once you're there, it usually plops you into overview parts, but you want quotes, okay? And then you just scroll down, and that's where this information is. So you will see, so for example, right now, gold is also starting its rollover. So that can get, we're going to get weird this week. And probably a part of the next week while the rollover is complete. And it looks like gold is going to roll into February. So yeah. Yeah, no login needed. Very simple. Just a simple Google thing. Gold trades well during the Asian session. Yes, I agree. Gold is one of the things you can trade during Asia. I don't, but, Dakota does and a whole bunch of his turtles do as well. I'm having a case of some frogs in my throat. Platinum holds structure very well when it trends. Trend traders glory. Yeah, absolutely, I agree. But platinum can also be good for a neutral day if it has a decent range, right? So if anything that has a decent range I can work with, as long as we don't get stuck and go nowhere, right? If it's just pinging up and down in a range, I can work with that. That's not a problem. My worst nightmare is when I enter a trade and it goes absolutely nowhere for like 4 hours. Now, I'm someone who can stay in trades for a really long time, right? How do you use DMI? Do you enter when it crosses over? No, for me, that is a lagging indicator. I never use lagging indicators to enter my trades. I use them once I'm in a trade to track movement, but I will never go, oh, it's just popped up. Let me do a short. I have said this before, that my indicators are a lens into the market, and I already know what I want to do with it well ahead of the market actually doing it. So all I'm looking for is just an evidence in real-time price action and bookmap, which I don't have open right now, but I usually do. However, it's a little bit memory heavy, so I don't want to overload the stream, just in case that, my computer decides to spaz out for some reason. But yeah, I never enter based on lagging indicators. So you will never see me entering, like the closest I come to that is maybe using VWAP. That's the closest, but that's also volume weighted. So there's still a volume component, and I also need to have something else there. Like for example, right now we have overnight volume up at 975, and it's exactly at this particular moment lining up with this call resistance area from the options data that I use. So that means if we do get there and the market still looks ballpark like that, I will have a hypo to short it there, right? But I don't need an indicator to show me that. All I need is to look at bookmap and see whether we actually have some sellers coming in, right? So big bubbles stepping in around there. And then all I do once I've entered, I want to see that the price holds below the ribbon eventually, right? But it's not going to be, oh yeah, DMI has showed me that I need to go in. No, you will never see me do that. That has never worked for me, okay? If I traded like that, I probably wouldn't have traded very well, and I would have given up trading many years ago, right? So, can't be careful with lagging indicators. Like I don't think they're that useful, but they have a use, but typically I would use 200 DMA, for example. That's a very good one. 50 DMA, so daily moving averages, as some kind of a supportive level. And usually on a very specific product like equities or something. I would not use it on crude oil. I would not use it on anything that whips around. Crude oil goes up and down. Like look at what happened yesterday, right? Like let me go back to this chart, right? So let's have a look at a specific candle that I want to show you. It's so terrifying. Oh my God. But this is what I love about crude oil and sort of hate it at the same time. But crude oil has been my breadwinner for a long, long time. And then we had, some weirdness around COVID, and then they suspended it. So I had to go to other products. That's why I went to some other things. And that's why I traded NQ at that point as well. So I'm not a stranger to NQ. I just don't like the thing. It's completely personal preference, and probably even my age. Like I know that many of you think that I'm like, mid 30s or something, but I'm actually pushing mid 40, right? So I'll be 44 in December. I'm not a young person anymore, and your brain does tend to slow down the more you do this. I've been doing this for 17 years. And when I was younger, like I was definitely a lot more gung-ho, right? I was like 3 lots immediately on a combine in oil, like no, nothing, no 1 or 2, like what's that? But now I'm like, let's start with micros. Even though I trade much larger in my private accounts, but I just can't justify, you have 4.5K when you enter into a combine. I cannot justify putting more than like a 1 mini, right? So I start with 5 in an XFA, maybe move up to 1 and 2 lots, but like that's it, right? That's the ceiling. And as soon as I do like a couple of days drawdown, I'm like immediately back down to micros. So I'm not like on these sort of accounts, I really don't trade big. At this point in my life, I'm so risk averse that I need like a high six figures, probably even 7-figure account before I will even consider doing 5, 6, 7, 10 lots, right? At one point I had an account, like this was during COVID, it was over 2 million. And yes, I traded like 40 lots, right? I think at one point it got close to like 3 million, and that was like, okay, I'm going to trade 80 lots now. But liquidity was absolutely mad. Like we had great fills. Like, you didn't have this thing of, oh, we don't have enough contracts. Everybody and their mother was a day trader, so a lot of liquidity in the markets, and I could trade that. But then as soon as that started drying up, I noticed I couldn't get into the same order. Suddenly you have to start partialing it, going in by 5 lots. And then I was like, screw this. This is just like a nightmare. So I started, I dragged down quite a lot of cash and started trading a bit more sensibly again. So, the size in your career, it's transitory. You will trade larger, you will trade smaller, you will trade larger again. So, as long as your system is still solid and can handle that approach. This is also a reason why I'm not a scalper, because I know once you get to a certain size, you can't scalp. Like, it's just not feasible. Grabbing forward takes in slippage and in, trying to really, really go with size. Try trading like 40, 50 lots in NQ and grabbing forward takes. The commissions are going to eat you up, man. Like, just the commission cost, round trip cost. So it's just not a feasible way to trade. So what you're seeing here, the way I trade, it's quite malleable to different account sizes. So no matter whether you're trading, 2 or 3 million account, or you're trading 4.5K account, my approach will remain very, very similar, right? So that's just my 2 cents about that. But yeah, look at this scary wick. So this is a wick of over 100. So let me just measure that, because I know we can't measure it here. That's actually 76 tick wick, and the whole candle is 120. I mean, that's some scary shit, right? So it's like 120 ticks there, and I was watching this happen as well. The funny thing is, I was stalking a failed auction there. Unfortunately, I had a house viewing at that time, so I couldn't get involved. I've been trying to sell actually this house in London. And we're, it's doing well. We're having a ton of viewings, and it's great. There's even like that. I'm not going to talk about it because it's like a personal stuff. But yeah, let's just say we're nearly there. But that means that I have to exit the house, and we have 8 dogs, so we have to like get them out of the house, get them ready and stuff, and then you're out of the house for about an hour. And right around when this was happening, I had to leave. So I'm like, well, I can't do new positions now. I'm going to be out of the house in the park, or walking around. So I take 4 and my husband takes 4. So we have to like split them up, because otherwise it's mayhem. They're still very young. They're just turning 3 actually in 8 days, and they're still like batshit crazy. So we have to separate them out. So he takes 4, I take 4, and then we go and walk them whilst the house viewings are happening. And they usually try and cram in quite a few of them, so we have to be out for an hour. And that sort of is putting a bit of a wrench in the works with my trading, because I'm out of the house when I'm supposed to be looking for setups. So it's best to just sit it out, and I did. I set it out, but I was kind of watching it on my phone, and I was like, damn, like whoever was used to crude oil earlier this year, when you thought the crude oil is slow, and it's like you just started trading crude oil, it's like nice and slow, and it's like there's nothing happening, and then you start running into this. That's what crude oil does, right? It's a very whippy product when it wants to be. And then you just lose a trade. You don't even know what happened to you, right? The trade is just gone. And no matter what you try to do, unless you were doing a failed auction, which has a 77% chance of working out, when we're looking at 3 to 5 year sample sizes, you were just screwed, man. Like, look at that, effed, right? Don't want to drop any more F-bombs like I did the other day. But yeah, it's not easy. So be careful of crude oil. It does do this sometimes, especially with like this headline risk and stuff. It's just going to be so quick. We seem to be reclaiming that characteristic of crude oil recently in the last 2 months. So I do feel for anyone who started trading it back in February and thought that it's a nice, smooth, calm product, because it isn't. It's tricked everyone, right? It's like, yes, we're just going to sit here. And I think it's because we had a lot of headline risk and they just didn't know what to do with it. It's like, we have no idea. I'm not liking this platinum anymore, guys, so I'm going to kill this for a whole 1 tick loss. Because it should have moved already and it's not moving. So this is now putting me into the flip situation, which is not something I do very frequently. So I'm going to wait until we start spending a little bit more time in here. But then I do think we have a possibility for a long. So maybe what I'm going to do, just front run it with like a very, very small amount, just 1 lot. And 20 ticks. Well, maybe not all the way there, because then you're going to get smacked if they decide to do a stop run. What's going on the dome? We don't have any bigger orders here, so that's not really very indicative of anything. Sometimes if I'm looking for whether they're going to stop run something, you will see quite a lot of orders sitting either below or above the price on the dome. And you do have to have level 2 data for this, so just keep that in mind. But yeah, so I am front running this because of the market generated information that we didn't manage to get a good move down. And I've given it a good bloody half an hour, haven't I? So, you know, so now we use that, the lack of movement to the downside and the fact that we are back inside initial balance, back inside that first hour of trading, back inside the red box. And now I want to see some commitment to go higher. Don't like this wick much, but it's only a 100 tick chart, so that's okay. And if we start to get some sort of movement here, I can then add to my full position and then run it to this 75 area. Now, usually if we had a bigger range, I would just run it to the middle of this range. So ballpark 71, but it's so small. It's like 62 ticks for the entire day. I think it has a very good chance to reach back to this core resistance and overnight VWAP, at which point I have my second hypo waiting for me. Now, whether I hold it all the way there or not, it's a matter of how the market does things. So yeah. How to know if an indicator is lagging or not? Well, anything that is an average of something and it plots a line in the middle of the chart, is always going to be lagging, right? The non-lagging indicators are usually a part of the auction theory or order flow. So you have several order flow. You can look on my YouTube channel. I actually did a series about order flow on different time frames, and I cover supply and demand, which is effectively institutional order flow. Some people will be like, "Oh, it's lagging," but it's not lagging. It's actual levels that the institutions have held their inventory there before bailing. So they are visible by supply and demand areas on very large time frames. You can call them support resistance or whatever, but I have a whole set of rules that I've learned from a trader friend back in 2007 who was working for big institutions, and that's what they were looking at. They were looking at supply and demand levels on weekly and daily charts and then doing their positions there. You know, unwinding things as we approach them, which caused like offspring areas to pop up. And I took all of the stuff that he's taught me and then tweaked it to match what I saw. I'm an originator of a concept called Q points, which is kind of like a missing piece to me. It was a missing piece of the supply and demand. Because sometimes I would see these areas turn around ahead of hitting these levels. And I'm like, well, what's going on there? And it's purely because the market would perceive that you would have some value to the other side. So the risk is low, but the reward is high. So naturally, they would start plowing in ahead of time. And I observed that it happened always in the top and bottom quartile of the established swing. So I came up with a concept called the Q points, and they are now part of our Blatek SD indicator. Unfortunately, still only on MetaTrader 5, but we're working on Ninja. So, so bear with us. All right, so what's happened here on Platinum? I did notice a 26 contract at 969.2, which got hunted, right? But now, I'm just going to stick with this to see whether we actually get a little bit more room. I just move this. It's to see whether we can actually 93.4. Actually get some traction higher up now that they've picked up some more orders. And the interesting thing here is that that stop run was inside the previous candle, so it wasn't down here, which kind of makes me think that this still may be bullish. So we'll see what they do with this. Usually the stop runs and stop hunts, as you guys like to call them, they're nothing more than the institutions kind of running out of, they run out of steam. So if you want to pick up more orders to push it one way or the other, how are they going to do that? Well, they're going to do a stop run where most of the orders are and then reverse it. Or stop run through it and then keep going, but it's very contextual. So you need to, like, for example, if that stop run was all the way below 68, I would be thinking then we have more downside. But because it was in the middle of this candle, I'm just thinking that's just a liquidity grab. So let's see what they do with it. I'm probably going to finish the stream once I've answered the questions. Is it worth trading in December? No, do not trade December. Do not trade... sorry, is it worth trading in December? For the first 2.5 weeks, yes, right? But even though some people have managed to make a lot of cash towards the Christmas period and stuff, it's more options and spreads that basically market neutral strategies. There is a Christmas rally in equities that happens most years. However, last time when Trump was elected, that didn't happen. So just something to consider. So I was trying to trade through that, and that was the deadest December that I've ever seen in my life. I don't know whether the same thing is going to happen. For now, it all seems pretty lively, so may it continue. However, I usually stop trading myself in and around 15th of December. I just, if I'm probably going to have to still run these. We're probably going to take some time off around the holidays. But generally, generally I like to just stop trading it around the 15th. So, first couple of weeks are great, traditionally, and then it just goes dead. So just keep that in mind. So yes, it's worth trading in the first part of December. Just don't go sitting there. Mick from the risk team, when he was still actively trading, that he was like doing Christmas dinners and Thanksgiving dinners with his laptop and still like trading. Just don't do that. So yeah. Take some time off, for the holidays. I know you guys have Thanksgiving coming up. We don't celebrate it here because, Thanksgiving not really something that British people would be celebrating. But Christmas is definitely a big thing over here, and no one really should be trading around Christmas and New Year's. So yeah. TradeX investing. NQ now red on the day. Dee, can you please discuss NQ and your analysis of it? Oh, God. Okay, NQ. I never discuss NQ just on its own. I always discuss NQ as a part of the bigger whole. I don't think that today we're going to see that great of a move unless we have headline risk. Okay, so that's one thing. We have earnings after hours today. And to me, this looks like a fake out, but let's, I can't be bothered putting all of my things on clicking and doing stuff on Topstep, so ignore this, it's just some research nonsense. What do we have? Well, we have distribution. So we got down to a demand, we bounced from it. This is the weekly chart, daily chart. Where are we in the whole distribution? Middle of nowhere. We do have low volume nodes around 2620, and then again all the way up at 201160 ballpark. And then again all the way down at the bottom of the range at, let's say 20,000 ballpark. But yeah, this is a big volume node on the very large time frames. I take my volume profile from the last 4 weeks. The way I see this is middle of nowhere, and we are distributing. So, but let's have a look at the 4-hour chart. 4-hour chart, not really giving me that much confidence. We do have a little overnight demand here. So right now we pop to it and are unable to get any traction from it. If anything, gun to the head, I would say that this is a little bit long bias, but because we've had so many days up, yeah, there could be a bit of a sell-off, but don't hold your breath because this is an equity index and we've started distributing. So bounce from a weekly demand is generally quite dangerous to be shorting equities, maybe just only as a scalp. So make sure you're not aggressively holding shorts if you don't have to, and if things are not looking right. For London specifically, we've opened above value. A more risky thing would be to try and go for the gap fill down to value at 26.40. However, when you look at the New York value, we are sitting right in the middle of it. So if this does kind of drop, it doesn't really make any traction higher up, we'll be opening inside value, which means higher statistical chance of a very boring day. Now, if we get headline risk, anything from Russia, Ukraine and all that, that could definitely put a wrench in the works. And, whether it's good news, equities might go up. Bad news, threat of nuclear war and stuff, very bad. So it's risk off time. We saw that yesterday. And then as soon as the official came out to say, no, we're not threatening nuclear bombs, they just recovered all of it. So just be very, very mindful of that. Shorts are good when they last, but generally I look at shorts as something that I should be in and out. So yesterday my short in DAX, I think it was all of like 15 minutes. And I made pretty good cash, but it was literally just recognizing that there is a risk off potential here. There's some headline risk, and just being very quick to see that the statistical averages have all been broken and they're pushing. So again, real-time order flow tools versus auction theory and all of that. Having good reference points is key. Let me just drag out some levels from the options data to see what we have there, and then we're going to finish it up. So just give me a few minutes, or a few seconds even, because it's not going to last that long, but I just need to bring in something. And then we can have a look at where we are with options chain as well. Okay, where are we? There we are. So I don't really have, as expected, I don't really have anything around here. I have a potential level up at 2,900 and then at 2,700. So that would be the closest thing, kind of like the extremes of the range that I would like to look at. I don't like getting involved in NQ. I mean, as you've seen, I can trade it. Like I did the reversal challenge last week and I won it. It's not that I can't trade it, I just won't. Like I actively will not trade NQ. But yeah, to me, this is a dangerous area. I think we're in the middle of nowhere. So if we open inside value for a New York session, I would probably just sit out and wait until we have a good amount of data and probably trade it towards the end. Certainly not traded for the first hour. Maybe I post NY cut sort of after 9 a.m. Central, maybe into Euro close when things settle down a little bit and you have a very good idea of the day type and which side they extended the initial balance. Did they fail? Did they succeed? And all of that. So yeah. All right, I think that's all the questions. Did I miss anything? I don't think so. All right, so I think we are done for the day. Probably going to kill this platinum trade because it's not doing anything either way. So again, not really a lot of action for London today. And I'm gonna take a break now, probably until we get to that post 9 a.m. Central time before I look for any more trades. So London, very quiet across the board. And yeah, I'm not going to be sitting here wasting my mental capital on slow movements that are moving in like 10-tick ranges. Can we see your Joseph Tredic guitar? I actually put it in storage because right now I'm showing this house. I don't have it with me. Once we do move, I can show it to you because it's going to be out again. But for now, I've actually taken out, because I used to have these like hands for holders, and they just looked like way too quirky. So we were kind of advised to just remove all of that. So we kind of made everything quite neutral looking, and it looks nice, but it's a little bit sort of empty-ish. So my walls are naked. So yeah, as soon as I can get my new house set up, I'm very happy to show you my guitars, and to show you the collection. I have a white one and a red one from Joe Satriani. Both are lefty guitars. And right now I still also have an acoustic Larrivee guitar, but I'm not really a core acoustic guitar player. I'm mainly just an electric guitar player. So yeah, I can show you my nice black nickel saxophone as well, because that's my favorite instrument. I'm a saxophonist too. In fact, that is my first instrument. So yeah, we can do all of that once I set up the new place. And yeah, but it might be a while, because there's still some things that we need to do there. We have to we're still like putting up fences and stuff, like, never mind. It's like personal stuff. So, but yeah, we'll get there at some point. Whoever's doing any sort of moving and stuff, like the time periods, like, you expect to be moving in, like, let's say 6 months, like easily you can extend that to a year. Everything is just so much slower than you think it's going to be. Anyways, guys, thank you so much for hanging here with me. Remember to upvote that Eurex post. I'm going to leave you again with that link. And obviously click likes, click subscribe. I really appreciate it. I will see you again here tomorrow for another edition of the Topstep session, Topstep London session. Hopefully Ray will be here with us. And we can have some chat about the gold and crude oil markets and a whole bunch of other things while we torture Coach Ray to stay up and pull a late night with us. So yeah, until tomorrow, enjoy the rest of the broadcast. This has been TopstepTV London session. I'm Deeyana Angelo. See you tomorrow. Take care.